Hello, I'm Simon Baptist, Chief Economist of the Economist Intelligence Unit. Thank you so much for joining us today at the Economist Asia Pacific Global Treasury Leaders Summit, supported by Deutsche Bank. Today, we're gathering financial leaders from around APAC, from around the world, to discuss the issues, particularly around the corporate finance agenda into 2021 in these very challenging times. We've got two parts to this event. The first part is going to be a session looking at some of the big picture themes that we think are important to be on your agenda for 2021. We'll talk about geopolitics and we'll talk about the rising importance of ESG and get some ideas about how we as treasurers should be responding to these kinds of developments. Later in the day, we'll have some sessions about the use of artificial intelligence, particularly how it relates to cash flow management and forecasting. I'm going to be sharing with you some of the key things that I think we should be looking out for in terms of international geopolitics through 2021 and beyond. We'll begin 2021 with the inauguration of the new US President, Joe Biden, and one of the big international questions is going to be, what does he mean for the world? What actions is he going to take? What will he continue? And for Asia, we've especially got our eyes on what does it mean for the US-China trade war. I think overall, the entrance of Joe Biden into the presidency is good short-term and bad long-term news for China. In the short term, it's a positive. I think he will be more predictable than Trump. He'll be less inclined to pick up fights for its own sake. He won't take the series of random measures that we've seen against companies like WeChat or Alibaba or Huawei. I think we'll see an end to the use of tariffs as the key measure of geopolitical influence that the US is trying to have over China. On the other hand, I don't think he will reduce all the tariffs that Trump has put on China. It would be politically quite difficult for him to be seen to be too soft on China. So while he won't be inclined to add new tariffs, I don't think he'll find it too easy to reduce existing tariffs. There could be some exceptions though, for example, amongst consumer-facing goods, where he can always say he's trying to reduce prices for US consumers of goods they buy from China. So there will be some short-term benefits for China from the new president. However, in the longer term, I think it will be a more difficult position for China. Biden is going to be more effective than Trump was at getting together that old US alliance, places like the EU, like Japan, like Australia, even now India, into a more common alliance with a common front addressing issues such as intellectual property protection or mutual treatment of bilateral FDI. That's something that the EU is particularly concerned about in China. And with China getting a bit more aggressive geopolitically through the COVID-19 period, for example, the military conflict we've seen with India in the disputed areas of the Himalayas, that's now turned India from a country that was very much trying to straddle both sides and not be fully on the US side and not be fully on China's side. It's really put India back squarely on the US side of this equation, with a view in India that China is now clearly a strategic competitor and a threat rather than a potential partner. We've also seen around the rest of the world rising distrust of China. Surveys have shown a huge increase over the last 8 months or so in international distrust of China, really coming from China's response to the pandemic, the secrecy in the early stages, and then that it was seen to be trying to use the pandemic to gain some political point scoring during the pandemic. Even though it has dealt with the pandemic well, that's improved its international standing to an extent, and its economy is now relatively even more important for the global economy than it was. But the political reaction to COVID has seen places like Australia and like Europe turn against China in a way that they hadn't beforehand. So I think in the long term, Biden will accelerate that, and China will find a more difficult international environment, while it's also more powerful. So there's something of an increased tension, which often happens as powers rise, an increase in the level of power and influence. At the same time, an increase in the level of difficulties and the numbers of conflicts that China is going to have to engage with. What else will Joe Biden do when it comes to Russia? I think he will be a tougher adversary than Trump has been. US Congress has had quite an anti-Russia stance, but Trump has been relatively pro-Russia, so he has not implemented a lot of the moves that Congress would have liked him to. I think Joe Biden is going to be more aligned with Congress when it comes to Russia. That said, the US is not that committed to sanctions against the country as a whole. We have seen sanctions against Russian individuals and against particular companies, but not against the country as a whole. I expect that is going to continue, and critically, the Nord Stream pipeline carrying gas directly from Russia into Germany, I think that is highly likely to go ahead. So we're going to see both Europe and the US continuing to try to differentiate between economics and politics when it comes to Russia. And this is in contrast to China's approach, where China definitely does not differentiate between economics and politics. If your country has a political fight with China, you also have an economic fight. Something that Australia is finding out right now, where the tensions that have risen around Australia banning Huawei and Australia passing laws really directed at China to reduce or make it more difficult for there to be foreign influence in the political system, and also its calls for an inquiry into the origins of COVID-19, put it in China's bad books, and we're now seeing an increased level of sanctions being put against all sorts of Australian exports, particularly those where there's opportunities to change sourcing to more friendly countries, for example, agricultural producers like Russia or like Brazil. Those kind of commodities are particularly likely to be targeted. So that's where I think US foreign policy is going to go, a bit more multilateral. The US will rejoin the Paris Climate Agreement. And this is an area where we could see some interesting international cooperation. China has just announced a carbon neutral target for 2060, quite a long way off. But it does seem like they are more serious about this environmental target than they have been about previous ones. It's the first time China's done a unilateral target like this, not part of international negotiations. But the key reason why I think this time it might mean more is because China now sees environmental and green technologies in the same way it sees things like electric vehicles and like AI and like automation as key technologies for influence in the international scene over the next few decades. So now the green technologies are perceived as having a part of the future geopolitical power of China. I think the policy push behind them is likely to be a bit more serious. China's also just launched its new 5-year plan. It's certainly critical for everybody to be on top of what is in that and what the new policy directions are going to be. And there are 5 things that I think are really worth picking out from China's latest 5-year plan. One is the renewed focus on self-sufficiency and innovation. So this is a slight turn inward. If you're a foreign investor in China, you can still invest, but there'll be increasing requirements, formal and informal, for your operations to be contributing to the broader goals of the government, particularly when it comes to the digital space and getting less dependent on the US for key technologies such as semiconductors, and then also when it comes to military modernization. They will be two key focuses of domestic policy. China's also finally ditched its GDP targets, but disappointingly, it has kept a target for income growth, which is effectively a GDP growth target. It's a slightly different. It maybe has less focus on the investment side than before, but the targets that have been announced for increases in Chinese income or GDP per capita do mean there'll be an implied focus on an unsustainable level of growth over the next few years. So that's got some risks around the financial sector in particular and the high levels of debt that might be needed to do this. I don't think China's heading to a financial crisis, but I do think it faces a risk of very low productivity growth, as a lot of firms that really should be allowed to go bankrupt are kept alive. A third key area of focus, social services provision, more on health, more on education, more about standards of living rather than purely GDP growth, particularly when it comes to green development. That's a 4th key trend, which I already mentioned. And the 5th one for China, Xi Jinping is not going anywhere. The last plenum did not see any key personnel changes, implying that he's likely to stay on for a third term, breaking the precedent that leaders should not serve more than two terms in power. We've also just had the big RCEP trade agreement signed in Asia Pacific, uniting, in a trade sense, the 10 economies of Southeast Asia, plus Japan, Korea, China, Australia, and New Zealand. India was in it, but it pulled out of the agreement. It sounds amazing on paper, 30% of or so of global GDP and of population. It covers a lot of the global economy, but it is a shallow agreement. It is much, much weaker than the others such as the CPTPP or many of the bilateral agreements that have happened. Where RCEP is interesting is it is the first one that's tied China into a key bit of regional architecture. It's a nice political win for Southeast Asia, where ASEAN normally is a bit of a talking shop, but this is a genuine political achievement that was driven by the ASEAN grouping. While it doesn't reduce a lot of tariffs over those that have already been reduced through other processes like CPTPP, which many of these countries are also involved in, it does provide a useful framework, and we could see it being built on in the future as the foundation for a more fundamental free trade agreement, say, for example, between big economies like South Korea and Japan, or maybe even Japan and China. In Southeast Asia, 2021 is going to be a year of political tension, particularly when it comes to Malaysia and Thailand. Both places are having a lot of instability right now. In Malaysia, we are expecting an election in 2021. Many factions in Malaysian politics, difficult to predict exactly which side is going to come down on. So we're expecting the instability in politics in Malaysia to continue, but that should not bleed too much into the business space. So we don't see the business environment as being as heavily affected by political upheaval in Malaysia as we do in Thailand, where there does tend to be a bit of a closer link from political instability into policymaking. The protests we've seen in Thailand are really unprecedented in terms of the direct challenge that they have been giving to the monarchy. Our baseline scenario for Thailand is the government makes some minor concessions that perhaps satisfy some of the more moderate or mainstream protesters, at the same time cracking down harder on the more committed parts of the protest. So in that pincer movement, very similar to what China did in Hong Kong, we probably will see a war of attrition, which the government in Thailand will win as we get through to the second half of 2021. But certainly a lot to watch all around the world. New US president, US-Asia, US-China, US trade relations set for some new directions. The new 5-year plan in China, some new priorities for China's economy, and a big political year in Southeast Asia as well. Lots to think about, lots on the corporate agenda, things that will ripple through financial markets. I hope that's some good food for thought for the rest of your discussions. Now I'm joined by Kamran Khan, the Managing Director and Head of ESG for APAC at Deutsche Bank. And we're going to be talking about what ESG means for corporate treasurers and what kind of activities and actions that we should be looking to take over the next 12 months to accelerate our involvement and to get the maximum benefit from and reduce the risks associated with operating in this increasingly stringent ESG environment. Kamran, thanks for joining us today at the event. Just to kick us off, can you tell us what you think ESG means in the context of being a corporate treasurer?
Thank you, Simon. First of all, it's a pleasure to be on with you and talk to your audience. ESG, for people like me who come from the sustainability world, is a very, very exciting and rewarding area because it finally gives us as a globe, as a civilization, an opportunity to do good and make money at the same time, which is very, very critical if we want to have any impact on the global climate change issues or many of the very important social issues taking place. So let me first start by laying the stage for this. Sustainability, of course, we all know, come from the development finance community. which is sustainable development. How do we bring about economic growth in emerging markets and so on? But ESG is a different animal. ESG comes from the investor side. And it started off as a group of investors, largely European, who said, not in my name, not with my money. So it was about what you must not do with my money. And so it started off with negative lists and came out with what you are not supposed to do. So in other words, it was about preventing harm from happening. It has now, however, very decisively become an active strategy, focused more on leaning forward and doing more good. So it's, do no harm is not good enough, I always say. ESG is about doing more good. And so it's a very, very important thing to highlight. The second thing that comes immediately after that is that it is a commercial transaction format. It is not about CSR. This is not about PR, although PR may actually impact financial returns for companies or their stock value. But it is really a commercial transaction format. And this is one reason why we pay so much attention to Asia. And I'm happy to talk about that because, in Asia, we do have the right credit models in terms of central government credit ratings and so on. We have pretty decent corporate governance structures where people can commercially transact. In some of the other regions, less developed regions, it's not so easy. So those deals become difficult to structure and close.
So you talk about Asia. Let's follow up on that. I mean, so you already mentioned that ESG investing and the pressures originated primarily out of Europe first, and of course they've now spread more global. So we're sitting in Singapore and Southeast Asia, part of the wider APAC region. I mean, to a large extent, I think it would be fair to say there's been a lot of rhetoric in this region about what should be done on sustainability, but much less in terms of action. We haven't seen, for example, governments in Asia, implement really costly schemes to improve the environment, like say a carbon trading scheme that, with costs that change corporate incentives in the way that the EU and some other European economies have done. How real do you think the commitment is to ESG in Southeast Asia? Are companies and people willing to pay real costs in order to achieve an ESG outcome? Or does it always have to be a win-win?
Yeah, so very important question. Let me see if I can answer that in maybe 2 or 3 layers. The first layer is, it may sound non-intuitive, but many of the clients that Deutsche Bank has engagements with, mostly, we bank with MNCs and so on. Even when they're raising ESG capital in Europe or North America, a lot of that money is being raised for deployment in Asia.
Okay.
So we look at it from a very global, holistic standpoint to say, we bank a client regardless of the office. We look at them as an international company. Most of our clients are MNCs. So that's one angle, which is very, very important. And their boards and their stakeholders demand them to do good as they make money in Asia or everywhere else. So there's that one layer, which is important for everybody to consider. So, your manufacturing facilities that you're setting up, the supply chain that you have in place, the distribution network you have, you want to make sure that you have some visibility with respect to ESG issues, regardless of where your HQ is and where you're looking at in terms of your next investments, right? So that's the first layer. Second layer is Asian governments, yes, they are late to the game, but in some cases, and we hope in most cases, that will be to their advantage. So part of my role, along with our government affairs people, is to engage with regulators around the region. And we are engaged in terms of helping them to figure out what the rules should be. So regulating in Asia is a very interesting thing. If you're a regulator in North America or Europe and other regions, you by and large focus on public interest, investor interest, and the usual classic Treasury functions. When you're a regulator in Asia, you have to do all of those things that normal regulators do, and also pay attention to the competitive strategy of your country, because this is such a competitive region. So what are you doing versus your neighbors? Are you attracting the right kind of capital to your jurisdiction? So there's a lot of that playing out. We think it's a good thing because people will be more receptive to this and create more incentives for companies to practice sustainability in Asia. The third angle is the supply chain. So a lot of companies in Asia, they live off of this foreign exchange, which they earn by selling into the global supply chain. And if there is one place where there is this ongoing existential risk related to ESG, it is in the supply chain. So if you are a seller into the supply chain, you wake up every morning wondering whether today is the day when my buyer will say, sorry, I can't buy from you because you're not ESG compliant. So there are drivers acting on many different dimensions here. This is why we thought Asia is a very, very important area where defining our brand, defining our way of doing ESG, particularly with respect to impact and understanding of issues around ESG impact, was very, very critical.
You talked about the competitive landscape in Asia, and I guess this gets to one of the important elements that could be a barrier to adopting ESG, right? Which is maybe me or my company might have an ethical or an ideological commitment to try and increase the share of our activity that is ESG compliant. But if my competitors aren't doing so, then I might be worried that I'm sitting at a cost disadvantage and I'm then going to lose business. How do the financial incentives stack up if you're a treasurer looking at your bottom line?
Yeah, so I think first we should look at ESG as a strategic issue that should be creating value for the company, first and foremost, right? So looking at ESG as a PR strategy or just a do good strategy is really that's why I started with sustainability versus ESG. This is really not about PR. By and large, the conversations that we have with clients, I tell them that your sustainability policies or practices that you adopt should add value to your company. They should improve your efficiency. At the least, they should provide you more visibility, better dashboard for your management so you can make smart decisions. So you have visibility on your supply chain, you have visibility on your network. It's closely tied with digitization as well, which is, a big trend in Asia Pacific. So the ESG strategy has to create value. Mm-hmm. And you must get some recognition for that. So the other thing I always discuss with clients is most companies that we know, big companies, have a sustainability plan. Mm-hmm. They usually have some sort of report that's attached to the annual report of the company. And I usually tell people this is like Camus' tree falling in the wilderness. Nobody saw it, nobody acknowledged it, nobody cares, right? If you want your sustainability commitments to be taken seriously by your own staff, by your investors, by your partners, your customers, your consumers, attach it to a financial transaction, public or private, right? It could be a private bank thing or a capital market thing. Attach it, let the market acknowledge what you're trying to do. Let the market price what you're trying to do in terms of your ESG commitment. And in many cases, we're now starting to see the market is actually providing some extra incentive for companies that are, pivoting towards sustainability. So that's the way to look at it. It must be value creative. It must not be just a PR strategy, although I fully acknowledge sometimes PR issues do impact your valuation. So, you do need to address that. And then third, it must be done in a way that gives you some value back for all the commitments you're making. So one way to look at it is to say ESG provides a marketplace. So I'm a company. If I'm a treasurer or I'm a company and I'm doing, the market wants me to become more and more sustainable. And what I want to say as a treasurer to the market is, okay, if I become this sustainable, what are you willing to give me? Right? So what's the benefit do I get? And I'm happy to discuss that because there is now beginnings of that benefit. So we are using terms like greenium, which is a premium paid if you as a corporate issue a green bond versus a regular bond, and same is true for social. In fact, we think the premium on the social instruments would be even higher because there are fewer such instruments available for investors to invest. So that's the way to look at it from a treasurer standpoint. And if you can raise capital, which you need anyways for growth, and also get your ESG credentials certified by the market, that's a very good two-in-one punch.
Right. And so, Karen, you've given us a case about why you think ESG is something that corporate treasurers should be focusing on, and it's got financial imperatives as well as sort of ethical or corporate governance imperatives. We then have to try and implement it. Can you maybe tell us about how have you gone about in your role at Deutsche of getting the organization behind this? How do you marshal resources? How do you disseminate the message across your organization? How do you get the key stakeholders aligned?
Very important question. Let me start by first saying we're a bank, and we have to be always aware that no matter how much we want to do something, we can only do it if there's a client on the other end asking for that service, right? So we can't just create out of thin air. So we have to focus on where our clients are. And the good news there is that almost every single client that we have at Deutsche Bank, I would venture to say, bar none, are thinking about sustainability. Every single, large company, which is a typical Deutsche Bank client, has, like I said, a sustainability plan. They are having discussions in the C-suite and so on. What they don't yet always know is how to make this real. And this is why I mentioned the idea of attaching it to a financial transaction so that it becomes real in the marketplace. And that's a treasury function, and treasurers have a pretty significant role to play in how to help a company's sustainability policy become real in the eyes of the market, okay? So that's one side. Then comes the other part, which you were really alluding to, which is, okay, what do we do in-house, right? As Deutsche Bank, how do we organize ourselves? Based on what I just said to you, client comes first is how we look at our strategy. So my role, for example, is very unusual in Deutsche Bank globally because of the importance we pay to Asia. My appointment was announced the same day that we announced our global ESG goals, which are 200 billion over 2020 through 2025, right? Okay. So the way we have organized that is to say, I work with all the 4 divisions of Deutsche Bank. This includes what we now call the corporate bank, the investment bank, our asset manager, as well as our private bank. Because as companies shift or pivot towards sustainability, they need all kinds of products and services. And that's what we are trying to do. So it's not a product-driven strategy. It's the opposite of a product-driven strategy. It's about understanding the client, understanding how we can help them become more sustainable based on their own policies and commitments, and then what solution can be put in front of them. And banks at the end of the day do sell a product, but the product should come at the end of discussions on the solution. So that's how we look at the business, and so far so good.
All right. Well, thanks very much, Kamran Khan, for giving us your thoughts at the beginning of the session. I'm sure ESG is a theme that's going to be returned to through the rest of the discussions. Thanks so much for your time, and really interesting to hear about your experiences as MD and head of ESG for Deutsche in APAC. Thanks so much.
Thank you, Simon. It was a pleasure.